Yeah. Welcome back. With markets hitting all-time highs practically every week, we have with us the renowned market master Raamdeo Agrawal, whom we have been speaking with on several sectors. Raamdeo, before going to the break, I told you the other disruption in the non-bank finance market is the coming of Jio Financial. Is this a big disruption? Can it make life difficult for NBFCs?
Why? It's a 142 lakh crore credit market.
Yes, it is.
Growing at 15% minimum. So you're talking about 21 lakh crores every year you are underwriting. Credit to be given. So in next 5 years, you're talking about 142 lakh crores more to be underwritten, if not even more than that. So I think there is enough for everybody. There could be some, if particularly small, narrow segment, if they want to enter, say consumer finance or something, there could be some rub off here.
That's the exact word that I was going to say.
Yeah.
See, they have already Reliance Digital shops where they probably are now giving Bajaj Finance or HDFC Bank credit over there. Then they have this entire Reliance Retail where they can still have, small EMIs, and they have the Reliance Jio, the telephone users. So there's a large captive audience they already have.
Audience is sure.
So can that make consumer finance disruptive? Which means if you have extra money, will you put it in Bajaj Finance or will you wait because there is a big competition coming?
I would not call it disruption, but definitely this new entity is worth watching. The reputation of the group is such that they don't do anything small. Yes. So I would, in fact, one of the things I would say is that how they handle the 6.5% Reliance treasury shares. Is it a holding company kind of a share, on the like held forever? So then finally there will be a discount to the market price.
I thought the rules said that you have to sell treasury shares. I thought the rules.
No, that's why they have. I think removed from the main balance sheet to the different balance sheet. They have different set of shareholders. Yes. So technically they have complied with that.
Okay.
But here, they can as well liquidate and create a capital for the finance company. Once that happens, if that is the indication, then what will happen is that the market will view it not as a holding company holding. Yes. It will look it as a kind of a cash in hand, cash equivalent types. Yes. So then discount will tend to be lower. So that's one aspect of it. But rest all operationally, what they do, what is going to be is it going to be extremely digital? Very widespread all over the country because they have 500 million.
It's a different kind of lending that you can expect because of the...
So they have to, when they roll out the kind of product, services, which segment they want to be big, I think we are still waiting.
Yeah, but you know this business in a way, Raamdeo. So do you think that collection also is important? You have a very good, database to lend.
Yes.
But for collection, you still have to put feet on the ground. So therefore, I won't say it is a very big competition. Can that be your view?
No, digital lending, which is there so far, what we have seen, is very distributed in the sense that $10,000, $20,000,
yes.
And the collection, physical collection, is not that big a deal. No, it is about the underwriting, whom you give, what kind of data you have, so that you are sure that his intention and capability to repay is very good. And that's where all this analytics, AI, and all this machine learning, those things are coming into play. And there, I think they should be doing well. But it takes time, even to master on that kind of technique. If you are doing unsecured, distributed across the country.
So it can only grow slowly.
Yeah, grow slowly. You cannot build it overnight. And by that time, your economy is growing, the opportunity size is growing.
Okay. I'm coming to the economy is growing part in just a minute. What is your sense about the consumption space? Because you're talking so much about economy. Until now, for all the growth that we are screaming, it has been a premiumization growth. You can't get away from several signs of K-shaped recovery. But now we're getting into elections. There is an expectation that there could be income transfer schemes, something to help rural development. So how would you bet? Would you say that it's time to look at the lower part of the K, the consumer staples, or would you persist with premium consumption companies discretionary?
Yeah, so again, discretionary companies have definitely done well, all the jewelry companies and those kind of stuff. But lately, starting even March, April, this quarter for sure, we have seen the broad basing of the consumption, in the sense that some demand has started coming from bottom of the pyramid also. If you look at the motorcycle demand, which is very categorized. One side is a car, other side is the motorcycles. So
the June motorcycle numbers were not very impressive.
Yeah, but April, May was very good.
Yes, April, May was very
good. So let's see how now the pre-festival and festival that will be the real big one. So if the monsoon is normal, crop prices are good, and MSP has been raised a lot, I would think second half should be very strong even for rural India. That's my sense.
Okay, so the lower part of the K will definitely get a boost.
That should come in.
Okay, now let me come to this big India story. We have everyone writing that third largest economy by the end of the year, maybe a 7.5 trillion, doubling the size by 2030. First of all, do you think that the growth path looks that clear?
Yeah, it has been very clear in the past also. Just that this COVID kind of disruptions come and that delays the march of the Indian economy, because lowest is say 5%, 4.5%, 5%.
Yes, lowest is 5. But I always tend to compare that China, when they got the demographic dividend, were at 12 to 14. Now, of course, that was a different world when WTO was, they got included in WTO. There weren't such tariff barriers. But now we are only talking about 6.5, 7. Do you think that can get broken and we can do better?
Yeah, so just to put the statistics on the table, for last 25 years, India has grown at 9% dollar GDP growth. Nominal dollar GDP growth has been 9% for last 25 years. Okay, so I have no reason to believe that next 5-10 years also to be 9% dollar GDP growth. So if you do 9% dollar GDP growth rate, you double.
Then you are doubling the economy.
8 years. 8 years. Okay. Now, can we go from 10 to 11 or 12? That has to do with your current account deficit or surplus, where because of services boom today,
we are doing very well.
Very well. Okay. So now you see last week our forex balance went up by $12 billion in 1 week. So, and we are sitting comfortably at $610 billion. So my sense is that the rate of depreciation of Indian rupee, if by chance we have a breather for next 4-5 years at 82, then your nominal GDP growth of say 11% or 12%, that becomes your dollar GDP growth rate. But whether it will happen or not, that because inflation differential is now again narrowed. But if they go to 2%, I don't think we'll be able to come to below 4% or 5%. So again, that pressure will start building up. But I think the outlook in next 5 years for a dollar rupee parity is pretty good. So I would think we have a chance to not only do 9%, but it could be 9.5%, 10%, 11% types. And that's why in China, when your export starts booming, whether it is services or merchandise, and your current account comes under control, clearly rupee dollar, your translation changes. So your entire nominal GDP growth rate becomes your real GDP growth rate. So that portion, that dividend,
that advantage will
yes, that we should get in next.
No, you actually put your finger on it. Last year, FY23, all economists were going with 3%, 3.3, 3.4% current account deficit. We've actually come in closer to 2.8 or 2.6%.
And last quarter was almost flat, isn't it?
Yes. Oh, last quarter was almost a surplus.
Yeah.
And this year, almost everyone is sitting at 1.4. Our historical number is 2.5. And for the current year, everybody, including Nikhil, will be talking about 1.4, 1.5 current account deficit. So it's clearly come under control. We, of course, can get hiccups from crude. But to just come back to the, the original topic of where the overall markets are headed, we've covered a lot of ground this year. So immediately, is there a fear that, yes, 20,000 is like, today, tomorrow types. But after that, things will start slowing a bit, either because of global headwinds or because we are already sitting at elevated valuations?
I would give a lot of credence to the current earnings season. If by chance earnings come better than what Street is expecting, because a lot of results are yet to come. PSU banks can clearly surprise. 100%, 120%. So those will like SBI, the big daddy is yet to come. So
that is expected to be the blowout number.
Yeah, but that adds up in the aggregate. And if aggregate without X or something, if Nifty EPS goes up by 25% in the first quarter, I think we have then steam.
Okay, I'm being warned I'm out of time, but one sector I have to push in. Power. We never talk about these kinds of sectors, but smart metering. And then this pump for hydro electricity companies to make them kind of 24 hours. And some reforms even in collections. You think you would go to a sector like that?
See, still the return on that particular investment is capped at 12% or something like that. So the return finally, unless you have a lot of merchant, a lot of renewables, where ROI, this thing on equity could be as high as 18, 20%, 22%, where the significant portion of your profit. So your ROE has to go up from 11, 12%, regulated 11, 12% to more like 18, 20. Otherwise, re-rating will be, it will be very...
So rather than buy power, buy AC companies.
Yeah, I mean, you can find a lot of other proxies, but it is very interesting time because power sector is running at full capacity, and we need very immediately addition of the capacities. So I think it's a boom time for power companies.
Okay, but the calculations we should remember when we pick companies. Take your point. I've not run out of questions, but we will invite you on another day when the Nifty and the Sensex scale another milestone, which looks like a regular affair now. Well, that's it on this very interesting edition of Market Masters. Thank you for watching.